Oil markets just got a jolt they hadn't felt in years, and it's got a very specific deadline attached to it. Stick around, because what happens at 4 o'clock tomorrow afternoon could shape gas prices, portfolios, and the global economy for weeks to come. Here's the headline. Brent crude jumped 9% on Monday, its biggest one-day surge since May 2020, after the White House confirmed a blockade targeting Iranian coastal areas and ports will officially begin at 4 p.m. Eastern Time on Tuesday, July 14th. Alongside that, President Trump is proposing a 20% fee on all cargo shipped through the Strait of Hormuz, a move already raising legal and logistical questions across the shipping industry. Let's back up for context. This entire situation traces back to late February, when war broke out between the U.S., Israel, and Iran, sending oil prices surging past $100 a barrel before a fragile peace agreement brought some calm. The Strait of Hormuz has remained the flashpoint throughout, since roughly a fifth of the world's crude oil shipments normally pass through this narrow corridor between Iran and the Arabian Peninsula. Over the weekend, the U.S. military carried out a large-scale operation, striking close to 140 targets tied to Iran, according to U.S. Central Command. Iran responded early Monday, targeting American military installations in other Gulf nations, and its Revolutionary Guard intercepted 2 vessels accused of using an unauthorized route through the strait. President Trump reiterated that the Strait of Hormuz itself remains open, but confirmed the U.S. would reinstate what he calls the Iranian blockade, targeting only Iranian ships and buyers, set to take effect at 4 p.m. Eastern Time Tuesday. The president reaffirmed the U.S. would act as guardian of the strait, reimbursed through a 20% fee on all cargo shipped through the waterway, arguing other wealthy nations shouldn't get free protection. It remains unclear how, or under what legal authority, such a fee would be collected, since the U.S. isn't party to the international treaty that governs tolls on waterways like Hormuz. Iran says the peace agreement has entered a crisis phase and warns it won't observe the deal if U.S. military action continues. Trump has already called the agreement dead. Shipping data already shows the impact. Voyages through the strait fell 52% week over week, with more vessels going dark to avoid detection. On the numbers, Brent jumped roughly 9% to near $83 a barrel, its sharpest single-day gain since May 2020, while WTI climbed close to $78, and U.S. stocks slid to session lows. Despite the sharp move, both benchmarks remain well below March's wartime highs above $100, and futures still price Brent near $80 by December. Global oil supply was actually oversupplied heading into the war, and China had slowed buying. The recent data shows Chinese refiners ramping imports back up. Across markets, energy stocks could gain near-term, fuel-sensitive sectors may feel pressure, gold slipped despite the uncertainty, and risk assets like crypto pulled back alongside stocks. Countries heavily dependent on imported oil, including Pakistan and India, could see wider trade deficits and added inflation pressure if prices keep climbing. Analysts say the gap versus March's peak suggests markets see this as serious but not yet catastrophic. All eyes are now on that 4 p.m. Tuesday deadline. If tensions escalate further, prices could climb given thin inventories. If things cool off, prices could settle closer to where futures already expect them by year-end. That's where things stand right now. Like this video, drop your thoughts in the comments, subscribe to Microfinance, and turn on notifications so you don't miss what happens next.